Hi everyone. Walmart reported fiscal year 2023 fourth quarter earnings results this morning. I've gone through the figures and I've looked at it from the perspective of a dividend stock investor, from a passive income investor to determine if Walmart stock is now more or less attractive for dividend stock investors. So let's get right into it. Revenue increased by 7.3% in the fourth quarter to a whopping $164 billion. That's the highest net sales for any company, and Walmart is the highest annualized sales company in the world. It's got the most sales overall, no question. The next closest is Amazon. Walmart's earnings per share increased to $2.32. This was up by 81.3% from $1.28 year over year. The bulk of this is due to a one-time gain of over $3 billion off a divestiture. But even if we exclude that $3.8 billion gain from divestiture, the company's operating income still would have increased, its earnings per share still would have increased year over year, which is impressive because inflation is plaguing companies worldwide. Walmart's having to pay a higher price for inventories, having to pay a higher price for transportation, having to pay a higher price for wages, and despite all of that, it's boosting its earnings per share, and that's impressive. Walmart's US comparable store sales growth grew by 8.3%. That means stores that were open for at least 12 months saw an increase in year over year sales. Global advertising sales grew by over 20%, led by a 41% increase at Walmart Connect in the US. This has been a lucrative source of revenue for retailers like Walmart, Amazon, Macy's, and others are doing this with their websites where they're selling advertising space on their website because, hey, they've got millions of shoppers that come to their website, and merchants would love the opportunity to influence those purchasing decisions, right? When you go to walmart.com, you're probably going with the intent to buy something, and a merchant would be very interested in trying to tell you, like, hey, you come buy our stuff. Don't buy my competitors' things that's like listed a couple of slots below me. Buy my products instead. And so they're all letting merchants bid over each other to generate that favorable search results. And that's generating a lot of revenue. And these are high profit sources of revenue. This isn't like selling merchandise where it comes with a cost of goods sold, right? Advertising doesn't really come with that high degree of a cost of goods sold. You pay once just to implement the technology, and then it's just kind of like a very high profit margin revenue stream that just keeps coming in. So this has been lucrative, and this is one reason why Walmart's operating profits could continue expanding for the next several years. This could be a tailwind boosting its margins. Gross profit margin in this quarter, however, decreased by 83 basis points due to markdowns. Now, I was impressed with this figure, and one of the reasons why is because Walmart and Target and Nike and various other retailers that I follow, they all have way too much inventory on hand. They overreacted to the shortages during the pandemic, and now they've got billions more of inventory than they would like to. And many of them are offering discounts and promotions to get rid of that inventory. And one of the companies that's not doing a very good job of that is Target. Target experienced a much bigger decrease in its gross profit margin because it had to offer greater discounts. So when I saw gross margin only decrease by 83 basis points, I was relieved for Walmart investors. Inventories of 56.6 billion as of January 31 were only up slightly from 56.5 billion at the same time last year. So they've done a good job of moderating inventories. It was up much higher in the middle of the year, so they've done a good job bringing that down. They've canceled a lot of orders, decreased a lot of new orders, and letting customers just buy what they have on hand instead of replenishing and refreshing their inventory. So they've done a prudent job of managing this excess inventory. In my opinion, a much better job than Target has done so far. Much better job than Target has done so far. Walmart is forecasting Q1 net sales of 4.5% and operating income to increase by 4%. Again, really good news here that they continue to expect sales growth amid this challenging environment. That means customers are choosing to go with Walmart because of their lower priced reputation, and they're taking away perhaps some customers from some higher priced businesses, maybe Target, right? Target doesn't have as good of prices as Walmart does. They're selling similar things, but Target sells almost everything at a higher price than Walmart sells it, at least from a customer's viewpoint. That's the way I see it. And for the full year 2024, Walmart is forecasting net sales growth of 2.5 to 3% and operating income to increase by 3%. Now, even though these numbers might appear pedestrian in terms of growth rates, this is good news because remember, Walmart thrived during the pandemic. Sales increased way more than normally does for a company like Walmart, and profits increased way more than usual for Walmart. So, just the fact that it can build on those already elevated figures is good news for Walmart stock investors. So, if you're looking at Walmart stock for its dividend, if you're a passive income investor attracted to Walmart for the dividend, this quarter was good news for you. This was a good quarter for Walmart stock investors. All right, so that's all I've got for this video. As always, I truly appreciate your viewership. You could be watching a million other things here on YouTube, but you chose to watch my video. I really appreciate that, and I hope you'll come again and see me next time for another video. Thank you for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.